Hi, this is Hutch with bankingtruths.com, and we help people substantially enhance their wealth building efforts by showing them how to build their own private banking mechanism. And in order to do so, we thought it'd be a good idea to take a look at the balance sheets of two of the biggest banks in America. And although the name's going to stay grayed out, what I can tell you is this is a very patriotic bank. And the definition of a balance sheet is assets and liabilities, what the bank owns and what it owes. And just cutting to the chase, if we scroll down to line 41, what you can see is they have life insurance, but they call it an asset. And the number associated with that asset is pretty substantial. It looks to be about 21 million, a little bit over. But actually, if we scroll back up, what we can see is the title of that column is Dollar Figures and Thousands, meaning we need to add a comma and 3 zeros to that number. So it's actually over $21 billion in life insurance assets. Now we'll find a much more popular asset class, real estate, on lines 10 and 11 on this balance sheet. So if we look at bank premises and fixed assets, other real estate owned, it totals a little over $9 billion. So why, you ask, does life insurance make up more than double how much the bank owns in real estate? Well, let's scroll back down to life insurance and list the 5 major benefits that big banks get from parking these billions of dollars into these life insurance policies. And number one is just the growth rate. They get a much better growth rate from the life insurance policies than they do things like CDs or short-term bonds. And many of these policies are structured to where they're taking zero market risk and they don't have to worry about annual losses. They just get steady growth year after year. Second, that growth is going to feel so much bigger because it's a tax-sheltered growth rate. So because the U.S. government deems life insurance to provide a social good for widows and orphans and failing businesses, they actually don't tax the growth inside of life insurance policies. The third benefit is liquidity. So in order for that $21 billion figure to show up on a balance sheet, it has to be fully accessible by the bank to invest in real estate, invest in their business, spend, do whatever they want with at any time for any reason. And most people don't realize that even retail policies can be structured in this way. The fourth benefit is protection, key person death benefit protection. So since it's life insurance, if the insured is to pass away for whatever reason, the owner of the policy would get a tax-free death benefit to make up for their loss. And I would contend that this protection is much more important for a small business or a family losing its breadwinner than a major bank losing, say, even its top 3 key executives in a plane crash. The fifth and final benefit are the generous funding limits allowed in these life insurance plans. So actually, these are tied to deferred compensation plans for these key executives where they'd be limited to how much money they can put in their 401k. Let's face it, if you want to put money into a Roth IRA, there's even lower funding limits. And if you make too much money, you can't even put money into a Roth IRA. Not so with life insurance plans. And so the banks take full advantage of this, funding retirement plans for their key employees. So just to prove that this is not an anomaly, let's look at the other major bank in America here. The name will be grayed out. And if we look at the real estate holdings, they're just under $9 billion, similar to the other bank. And if we scroll to line 41, just over $18 billion. So again, more than double the amount of life insurance than in total real estate combined. Come on by and check out the free resources page at bankingtruths.com for a plethora of free materials to help you continue with your learning.